Good morning and welcome, Patriot Radio News Hour. Joe and Jason, happy Tuesday. I hope it finds you well out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And we were running $5. I just want people to know we are out. We are out of the sale on the $5 Indians, but don't worry. We've got other things planned for today, but I just wanted to put that out there. Of course, the physical delivery of gold and silver, platinum. Matter of fact, the platinum's already going out to the people that decided to jump on that special last week. Our website, allamericangold.com. Again, the phone number, 800-951-0592. The power's back on in Spain and Portugal. Oh boy. Let's hope that they're being very quiet. But it definitely appears that this was a self-inflicted gunshot wound. When you go 100% renewable, apparently it causes problems with the power. Who knew? Who knew? But anyway, good news there. The power's back on. We have another backing up of a trade tariff today. This time, the automakers are going to get some form of a break. Apple's gotten a break. The chip guys got a break. Now the automakers got a break. You know, no break for the little guys, but we'll get some details there. I'll kind of tell you what to expect there as General Motors. They had earnings today, said, hey, we're canceling our buybacks, we're canceling this, lowering our dividend. We don't know what to do, essentially is what they said, for lack of a better term. But it looks like some sort of reprieve coming in the auto industry, so that that makes Wall Street happy, right? Let's get a reprieve. Then there was a report. This one was really funny, I guess, that Amazon was going to start displaying the cost of the tariff when you purchased items from Amazon. So could you imagine, I don't know, you're buying whatever it is you're buying. I'll use my wife. My wife buys her nails from Amazon. Right? Could you imagine, okay, well, the price is, and I don't know whatever the price is, right? Let's just say it's $10. But then Amazon says, well, they used to be $10, but now they're $12, and the tariff is the reason why you're paying the extra $2, right? So that story broke. The White House immediately had a press conference, and they had the press secretary, Caroline Leavitt, and also the Treasury Secretary, Scott Bessent. So this was a big deal. It didn't sound like that big of a deal, but Caroline Leavitt said this is a hostile and political act by Amazon. Yes, to tell people why the cost went up or what the tariff was costing them was a hostile and political act. Why didn't Amazon do this when the Biden administration hiked inflation to its highest levels in 40 years? Now, that may be true, but I don't know that the Biden administration, didn't throw tariffs on people to do it. They just were, the Biden administration. I don't know how you would put that in there, but this is another reason why Americans should buy American. Shares of Amazon immediately went lower. However, after seeing this press conference, and it was, like I said, Carol Levitt pulling no punches, and then Scott Bassett, the Treasury Secretary, was talking about the same thing, very disappointed, and we're going to be cutting regulation. So you know, we're going to offset these things, you know, that whole thing. Amazon issued the following statements: that Amazon said it was never a consideration of showing tariff cost. The team that runs our ultra low Amazon haul store had considered listing important charges on certain products. There was never a consideration for the main Amazon site. I don't know what the difference is, I'll be honest, but apparently there is. And nothing has been implemented by any Amazon properties. And then, of course, obviously, the share price recovered. But it was highly entertaining. Wait, you're going to do what? Well, I guess we'll show you. Yeah. And then Amazon said, oh, no, we didn't mean it. We were just kidding. Patriot Radio News Hour. We'll be back after the break. Never a dull moment. Patriot Radio News Hour. Let's check the markets. Dow's up 240. S&P's up 12. The Nasdaq's only up 16 as Amazon stock starts to recover here. But automakers looks like a reprieve may be coming. I'll give you the details to that in just a minute. The 10-year note down a little bit today. I'll tell you why that is happening in just a minute. Crude oil down as well, all for the same reasons. The gold and silver market is mixed right now. So right now, gold is down, right on the, and that to be expected, right on the, hey, we're going to help out the automakers here. 33.11 right now for gold, down about 30 bucks. You know, 30 bucks is kind of like a nothing move anymore. It's kind of weird, isn't it? That used to be a big move. Now it's like, silver's up 10 cents. Probably again, right, on the automakers. Platinum down a couple of dollars, but had a big day yesterday, $9.84 on platinum. And again, we keep stressing being diversified. Boy, it's a smart thing. It's gonna be a very tough market here. There's a lot going on. They had, I'm trying to think of the Ways and Means Committee chair on TV this morning talking about the budget, and just simply refused to answer how much it's going to increase the budget. And then also, and we'll see here, refusing to answer whether or not tax cuts for the millionaires are going to happen. And you should have seen the guys on scene. They must be really rich. That's what I think of. These guys that do the shows, they must make a lot of money because they were like, oh, my God, well, you got to do that. You know, if we're going to make this work, but we'll see. But it was interesting that when, in regards to Amazon, who said, hey, we weren't considering, obviously it sounds like they were, right? I don't know what the ultra-low Amazon thing is, but it's kind of a weak denial, if you will. But the White House, both guns blazing, talking about how Amazon has partnered with the Chinese propaganda arm. And really go, and then, of course, like I said, Amazon said, hey, this isn't right. You'd think they would have made a call first. I don't know. But it made for good TV. When it comes to, okay, why is oil down today? We had the JOLTS data out today. So remember, it's jobs week. Not that, listen, it's not a great super accurate type of report, but it does give you a good breath of, hey, how's the job market looking? Are people or companies looking to at least gather resumes? Like I said, because, some of them post jobs that don't exist, as we know. But, you want to believe, hey, the majority of them, hey, are actually looking for people. It fell again. We're now at the lowest levels, at least going back, because after COVID, everything got a mess. I mean, at one point, the JOLTS survey was, 11, 12 million people, just above 7 million. They were expecting 7.5 million, according to the Labor Department. So it came in weaker than expected. The report noted total job openings declining by 900,000. So obviously, it was above 8 million. They're expecting 7.5 million. We got 7.1 million on the JOLTS data. So I think that's another one. Hey, when we think about bad news is good news, right? Wall Street likes that. Again, the bigger jobs numbers, we'll get ADP tomorrow, which, that's an indicator. Obviously, Friday's the big number. Thursday, jobless claims. That thing hasn't moved, at all. So we'll see. I'm gonna throw out a crazy number. Ready? 220,000. Right? We'll see, because that's what it seems like it is every month. But again, the big thing moving the market today has to do with the Trump administration saying that they are going to provide relief for the automakers. Farmers, no word yet for you guys. And I don't know if that's going to happen now. I know that the Ways and Means Committee chairman talked about maybe something for farmers in the budget, but we'll have to wait and see. So here's what they're saying. That the decision by the Trump administration on these automotive tariffs is they won't charge them for other duties. Steel, aluminum, right? So right, we've had that tariff in effect. The move is going to be retroactive, meaning that the government, I guess, is going to pay back the automakers any tariffs on things that weren't parts, I guess, for lack of a better term. The 25% tariff on finished foreign-made cars went into effect last month. It will also modify its tariff on foreign auto parts, slated to be 25% and affected May 3rd. So, this is another thing we forgot about. A lot of these tariffs got pushed back. Right? When they went to 10% and then said, hey, May 3rd. Allowing automakers to be reimbursed for those tariffs as well. The amount equal to 3.75% of the value of U.S.-made cars for 1 year. The reimbursement would fall to 2.5% for cars valued in the second year, and then be phased out altogether. So pretty complicated. But essentially a give back here from the White House when it comes to the automakers. Obviously, we saw the same thing happen with the chip guys, Apple, NVIDIA, Amazon, the like. Howard Lutnick told the Wall Street Journal that the president is going to make these changes a major victory for the president's trades. For I don't know if it's a major victory or not. But again, I think this highlights the problems that we face in trying to roll these things out. We're kind of finding out, man, that didn't work very well for this group. It didn't work very well for that group. Apollo was out yesterday saying that they expect big layoffs, what they're calling mass layoffs in trucking and retail. Apollo saying that the recent tariffs is going to lead to this the trucking, and right? I mean, it seems like we never have enough truckers. Well, apparently, maybe we will. We'll see. But they're just looking at freight activity, and I kind of told you guys this yesterday. Freight activity has, you're talking about the days at our ports now. It's like Thanksgiving and Christmas Day. That's how light the volumes are. I didn't even know the ports were open on Thanksgiving and Christmas. But you can imagine, right? It's light staff, right? And not a lot happening. They're saying that is what is going on a daily basis. So we'll have to watch. UPS came out today, said they're going to lay off 20,000. Now, I think a lot of that is Amazon related. So Amazon, I think they do their own deliveries now, right? So they're not using UPS nearly as much, but they also said, hey, we've got issues when it comes to the amount of deliveries, right? Deliveries are down. And then Adidas said that they will raise prices for all products in the U.S. market, saying that the company was, quote, somewhat exposed to the 145% tariff. They've already reduced exports of its China to a minimum. They said the biggest increase were countries where there was already a 10% tariff. And remember, Adidas is saying, well, May 3rd, that's supposed to jump to 25%. So we'll have to see. Will there be I don't know, maybe there'll be a sneaker cutout, a clothing, once we get to that, right, you start making all these cutouts, and then all of a sudden, I guess, it's not necessarily what we are hoping or expecting any of it to be. So we'll keep you posted. It is early, and it really is China today. And this is the other, and this is why I say the farmers, the ranchers. China's essentially canceled almost all food purchases from the United States, as well as energy. They buy a lot of liquefied natural gas. They're one of their deputy directors said today, China is fully capable of ensuring basic self-sufficiency in grain and stable energy supplies to withstand a confrontation with the U.S. that has seen both sides raising tariffs. And as far as agri-products and fuel, they were really the two biggest things that China imported. So when we think about the effects here, we may not sell a ton of stuff to China. Obviously they sell way more to us than we do to them. But this was big. This is a big part of what they do. The trade war has brought the trade to a standstill. China said today that it's diversified its food and energy imports in recent years to reduce its dependency on the U.S. And, of course, I know about the farming side. That Brazil has taken up a ton of that slack. Big on soybeans, big on the meat side of it as well. But China says these products are highly replaceable, and the international markets have abundant supplies, and China has significant grain reserves. Even if China stops purchasing feed grain and oil seeds from the U.S., it will not affect China's food supply. Now, I don't know if I believe that. I'm going to say that is doubtful. But I guess the message is China's saying, hey, listen, we're prepared. We're going to dig in. So they also denied again today. Listen, I think they're talking. I do. But they also reiterated, hey, we may be having talks with the United States, but it isn't about tariffs. Okay. Well, by the way, to give you an idea, $25 billion just in soybeans and corn. We're back here, Patriot Radio News Hour, Joe and Jason, on this Tuesday. So, yeah, that was a lot. So, it started with, I don't mean to laugh, but that if you didn't see the press conference, you got to see it. It was really, really, Trump-like, I guess, and attacking Amazon after a report broke that Amazon was going to show the cost of tariffs to their customers, and working with Chinese propaganda arms and calling them basically saying that it was a hostile action by Amazon, and then Amazon.
It sounds like, Joe. It sounds like that there's a little rift in the billionaires club at the over at the White House there, because I think he was in the peanut gallery, so maybe he was trying to get. Maybe Jeff Bezos was gathering information and decided, okay, I'm going to take this and use it to my best advantage. I mean, that's business is business, right?
Well, why do I believe that Amazon and Meta, Microsoft, they're still loaded with lefties in there. I wouldn't be shocked if Bezos wasn't even in the room when they were hatching this. Word got out. Amazon immediately issued a denial, but when I read the denial, it kind of sounded like, oh, well, yeah, we were gonna for our ultra low buyers, but not for everybody. But they have now said that they are not going to do it. That kind of had the markets, like I said, the one good thing, very complicated thing with automakers, but essentially some relief from tariffs there. Then on top of that, we got the JOLTS number. By the way, for those of you wanting to know, in JOLTS, they still say that the government has 98,000 job openings. I'm not kidding. But that is the first time government job openings has been below $100,000 or below 100,000 jobs going back to COVID. So it is the first time, I guess, in 5 years. So I guess, Jason, I would expect it to be a negative number, or at least zero, or next to zero. But obviously the government probably has, they're got to have a few people. But the first sub 100,000 print on government jobs and came in at 98,000.
It makes sense. I mean, Trump was, so-called trimming the government. I don't know exactly. I know that there's people losing their positions. I don't know if they were losing their jobs, Joe. But I would say that the reason that number is probably over 100,000 is because there's millions and millions of people in the government that are working. So there's going to be a turnover. I mean, just from people dying, right, and retiring, you're going to have to put people in those positions. So the number being lower does make sense, Joe, because just the rhetoric of, hey, we're cutting government positions across the board probably makes a lot of the people that are in the government hold their positions tightly, which means less opportunities. So it does make sense, Joe. But as far as firings, I'm still not 100% sure that all the government positions are people being fired. They don't seem, when I see the videos of the government employees that are fired, they don't seem very uncomfortable with not having a job. They keep talking about how they're probably going to be back in, or maybe there's another position available. So they don't say another government job. You know what I mean, Joe? So. But I think the rhetoric works, I mean, I think those people in those government jobs they're suddenly finding out how valuable those positions are. They don't want to lose them, Joe. I don't want to lose my job in this atmosphere. I better hold on. It is a good way for the commander in chief to get loyalty amongst his workers. Hey, snap in shape, or you're off with your head, right? He is the you're fired guy, right?
The you're fired guy, yeah. Why not, right? And it's interesting, like I said, but it's the first time in years that the federal government had less than 100,000 jobs. Now, granted, it was only not barely under 100,000, but hey, it is a step in the right direction. By the way, that was 40,000 less than last month. So maybe they got the IRS to take down those help wanted signs. I don't know.
Well, I guess it's creating a value in the government job department. So there's I'm guessing, are we going to save any money with these firings? Because I'm wondering if the people that are left are they become more valuable, I suppose, Joe, because, well, if you don't have me in this department, the whole department falls apart, right? What did we see that? I saw that metric that every government job that's fired, there's like 5 private jobs that goes with it, right, Joe? So you become you get rid of government jobs, you become more and more important than ones that are still there.
Listen, I'm going to say this. I haven't seen the cascade effect, right? If this was as horrible as, I guess, the left would say, why aren't we seeing more people getting fired? So, you know what? It says to me, hey, there's a lot of fat there to begin with. And again, to Jason's point, how many of them are actually getting fired? That I don't know. But we haven't seen a lot of spillover, have we, into the private sector, at least not that we've heard. And again, I've already made my big prediction for jobless claims Thursday, 220,000, because that seems like what it is every single week now, but we'll hold our breath. And then last but not least, and this is something where, again, maybe we do need to be able to start firing these people at the Federal Reserve. GDP calculations. The Fed is now saying that, in the Atlanta Federal Reserve, they're the ones that collect this data for us. And I don't know if you saw it. I actually didn't even report it because it was nonsense. That last month, the model said that GDP was going to be negative 3%. Most of that, they're blaming gold. Oh, look at all this gold came in. Listen, all this tariff stuff. Gold being part of it flew into the country, which is, you got to remember, the trade, by the way, it was terrible. That number came out today, and I want to say it was the biggest on record. And of course, should be expected, and it also was going to be something that, the next month was probably going to reverse itself, right? Because, okay, I set all this stuff in to beat the tariff because guess what? The next couple of months, I'm probably not going to be adding because of the tariff. Well, apparently, Jason, this broke the Fed model. It was completely broken. And now the Fed said, we're going to try a new calculation. So I'll tell you what they said when we get back. 800-951-0592, Patriot Radio News Hour. Joe and Jason on this Tuesday. Remember, things heat up after today. We get ADP on Wednesday, jobless claims and inflation. Keep our eye out for that on Thursday. And then, of course, the big government jobs number on Friday. Remember, they want low numbers. Let me rephrase. They want low hiring, high layoffs. That's what they really, I know it's crazy, but that's what they're hoping for because they know that the rate cuts are going to be needed. Really quickly before we finish with the mess that is the Federal Reserve, $10 liberties. Another big sale today, $17.75 on $10 liberties, saving $40 if you buy 10 or more. $17.65 at 800-951-0592. And I don't know here, but gold for the last couple of days now has tested 3,300 and bounced off. Tested 3,300 today, bounced off. So it looks like are we establishing this new higher low, getting for this next leg? I mean, it's been like 5 days, four days where when gold hit that intraday. Of course, when we were all sleeping at the intraday high, but gold's like off like $100 from the New York highs. I mean, that's kind of where it is. But it did touch that 3,500. This has been, at least this year anyway, this is probably the longest gold's gone where it hasn't shot up again. We'll see what these jobs numbers come out. Obviously, Jolts is saying, hey, there's less jobs out there. There's less jobs out there. Is that going to parlay into a much lower job print? We'll wait and see. But the Federal Reserve, they've really, I mean, I don't understand how you could be this dumb. I mean, these guys are supposed to be, PhD'd and doctorate this and master's that. I graduated at the top of my class. I went to the best schools. And you mean they couldn't figure out, oh, hey, if we're going to put these big tariffs on, probably the month before they go into effect, a lot of stuff will come in ahead of it. And then the next month, it won't. So let's make Jason, some form of educated guess as to what that would look like. Nope. Right now, the current, and by the way, very broken GDP model from the Federal Reserve stands at negative 2.5. That's what they say GDP is going to be next quarter, negative 2.5. Well, yesterday, was it yesterday? No, I'm sorry. It was April 24th. The Federal Reserve, it took them until then, realized, oh, wait a minute, maybe we need to release with some smarter math. They did that. Negative 0.4, still negative, but instead of negative 2.5, negative 0.4. By the way, we will get this new number, another new number at the after we're off the air today. So I'll give that to you tomorrow. Consensus, when you talk the average forecast, anywhere from 1.5 positive to negative 0.5%. So, Jason, it just shows you, and again, how can the Federal Reserve be out there? Listen, at one point, they had GDP at negative 4. Negative 4%. I mean, that would be like worse than COVID. I mean, It's an idiotic number. I mean, it's almost impossible to do, and yet they put it out there, and people get all upset when Donald Trump says maybe we should fire Jay Powell. I don't know.
Well, I mean, to me, it's an impossible number with the inflative situation we're in. But if they actually were to crush inflation, it was just say they didn't print up quite the amount of trillions that they would do that, I could see negative 4%. I could see a massive market crash, Joe. But the reason I don't see it being that big, like as you're saying, is we know that there's a money printing idea that's getting ready to boil, and then that's going to push the already high inflation to a higher level, and that's going to mask the GDP a little bit, isn't it, Joe? That's how that always masks GDP. I mean, the Obama years, you had 1% GDP. It seemed like for the entire 8 years. But the markets, the markets were horrible, though. They were horrible. Well, it was the money.
Well, we couldn't get 2% inflation either, right?
Correct.
Remember?
Correct. And so I think that's what they're talking about, Joe. I'm not saying that they're right in saying that, but I think there's a path for that. What if Jerome Powell doesn't want to print up money and help Trump's economy? What if that doesn't happen, Joe? Then I think negative 4, that could be on the table then, right? I think that's crashing and burning, Joe.
Oh, without a doubt, it'd be. And listen, Jay Powell's going to be forced to print the money, whether he wants to admit that to people or not. The Treasury market.
Maybe that's why what they're doing to get him motivated. Hey, Jerome Powell, negative 4%. Now what are you going to do? Maybe that's what that is, Joe. It's a threat.
We're gonna help motivate you. And by the way, like I said, the Ways and Means chairman was on TV today and basically said, don't worry about deficits. We're going to have a pro-growth, grow your way out of it strategy coming. So everybody buckle up. This may be the last quiet week we have in a long time. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Tuesday. Like I said, kind of ratchets up every day this week. Tomorrow we'll have ADP. Thursday, jobless claims and inflation. And then, of course, the big jobs number on Friday. So anything and everything is on the table. Today's special, if you want to get in, saying, hey, you know what? I think we're going to get some softer numbers. I don't know. Listen, we never know what it's going to be. But if you want to jump into the gold markets today, $10 Liberties, $17.75, and if you buy 10 or more, $17.65 at 800-951-0592. And like I said, Jason, it's going to be interesting to see what happens on Friday because the way the government tracks jobs, we've been seeing a lot of the job growth being government jobs. If that actually disappears this time around, they could luck out here, Jason. They could luck out and get a number much closer to the, they would love it to be below 100,000. I don't think that's going to happen. But a number maybe in the lower 100,000 range, I think would be considered a win for Wall Street and for those that want the Federal Reserve to start cutting rates.
I think we're going to see it at some time, aren't we, Joe? Because I think printing into inflation, right? That's inflate your way out of it. I think you and I both have said it many times. That seems to be their mode to try to kick the can down the road. How many times can they kick the can down the road before something bigger has to happen? And maybe we'll get both. We'll get the money printing and leading us into something bigger and worse in the future. Because I don't know, Joe. It seems like the standard of living just seems to get lower and lower and lower for the average American, Joe.
Yeah. Well, based on what the Ways and Means chairman said on TV today, the government is going to blow this budget up. He just didn't want to answer. And again, I get it. Why would you want to answer that question? And instead just stuck to the, hey, we're pro-growth. And it's going to be something where part of the problem with it, it's a little complicated, but not. They talked about when they lowered the tax rate on corporations, and they said and revenues went up. They did because these corporations took advantage and had a lot of money overseas, brought it back home, because of the lower tax rate. That's already been done now. So they're not gonna bring it home again. They already did. So I don't think it's gonna quite work out the way they're telling you on TV, and I think they know that. But either way, the message was extremely clear. We're gonna be printing, and we're gonna need the Fed to come in and bail out the bond market. I think that's coming no matter what.
Yep, I agree, Joe. That's maybe the whole market. Maybe they have to buy the whole thing.
All the hedge funds and everything else. 800-951-0592.